Welcome back to Business Week on Arise News. Now, here's a quote. I am aware that events over the past few years have also put CBN in a bad light. Under my leadership, the Central Bank of Nigeria will vigorously address these issues. We assure investors and the business community that the economy will experience significant stability in the short to medium term. That was Nigeria's central bank governor speaking at his first major speech since taking the helm at Nigeria's central bank, and he chose the 58th annual bankers dinner of the Chartered Institute of Bankers of Nigeria to do it. Here are some of the main highlights I took away from the packed hall at Echo Hotel last night. First, he talked about the recent stress test of Nigeria's financial services sector, which showed stability, but he said the CBN will direct banks to increase their capital base. Then he talked about the review of licensing frameworks for payment services and, very interestingly, the tracking of indicators related to human development, including monitoring of daily wage rates in lower income jobs. He also mentioned the regular open market operations that the CBN had been undertaking to mop up excess liquidity and the inauguration of a new liquidity management committee to review conditions daily. But that wasn't all. He also acknowledged recent corporate governance failures and said the CBN would send the right signals to markets whilst utilizing orthodox monetary policy tools with a focus on price stability and no more direct interventions in terms of quasi-fiscal activity. And finally, he said the CBN has satisfied requirements under the Act of 2007 and that there will be no more Monetary Policy Committee meetings for the rest of 2023. I'm joined now by renowned economist Bismarck Rewane to help us dissect what was a very epic speech in terms of length. But let's see how epic the content was. What's your take? What were the main highlights for you?
First and foremost, I think it was a very candid and honest view. I think it was professional, and I think that he came across as a professional economist and central banker. Today we're going to talk about what he said, the impact of what he said on investor confidence, impact of what he said on consumer prices, because that's what happens at the end of the day.
Yeah.
And what's going to happen to the Naira exchange rate in the foreign exchange markets. And in the end, what's going to happen to Nigeria's growth and macroeconomic stability. That's what it is. But firstly, let me point out that he stated, my takeaway first and foremost was that he's back to basics. He's going back to the orthodox monetary policy and central bank act and management. In other words, the central bank is the bank of the government, the bank of the banks, provides sound advice to the government, and also to protect, to issue legal tender, and to protect the exchange rate and the external reserves. I will also go on to what he did not say, which we wanted to hear. But what he said, one, was that Nigeria's economy is more globally interconnected. In other words, global events have a greater impact, or more than proportional impact, on domestic activities. So there are things within our control and things outside our control. That was clearly stated. He also said that the imponderables in the global market, including conflicts, was affecting the pushing up interest rates in advanced economies, especially the US dollar. And if the dollar appreciates in value, automatically other developing economies' currencies will depreciate in value. That's true. Number three, that commodity exporters, African countries in particular, suffered from the cyclicality of prices, and therefore our performance as an economy was also dependent on those cyclicality. And that cyclicality means that things go in a direction and then recover as we. Then he also acknowledged, which was important, that the Nigerian economy is performing suboptimally because of impediments and constraints. And of course, again, you need to debottleneck the economy and make sure that the constraints are there. Well, he reiterated that the central bank there are three rules for monetary policy. One is called the discretionary rule, the other one is called fixed rule, and the third one is called the feedback rule. I heard him say, and he didn't say it explicitly, that the feedback rule, in other words, I'm going to be consulting with stakeholders.
Yeah.
Right? I'm not going to come up willy-nilly and say, this is the new So there's going to be consultation. That means feedback rule. Feedback rule has its advantages because there's a lot of consultation. But the point is that by the time you get the feedback and act, whatever the opportunity or the danger could have gone away. So so I think that's important. But it's because of the lack of credibility of the previous dispensation in the central bank, it was actually heartening, right, to hear that kind of comment. He alluded many times to the short to medium term, or maybe the medium term. Keynes said that in the long run,
we're all dead.
We're all dead. So what the market wants to hear is, what are you doing tomorrow?
Now, yeah.
He also said, rightly so, that the minimum number of times the Monetary Policy Committee is to meet are 4 times a year. But one of the problems with Nigerian ingenuity is the minimum cannot be the maximum.
Fair enough.
And when there's crisis, and we are, and he alluded to the fact that the economy is challenged, in fact, that is more, you should meet more times than the minimum. When you say that the minimum score to pass is 40, and you say, okay, yes, I've got 40, and then I'm okay. That was a flag that I picked, which I was not so happy about. But having said that, the question is that he talked about the importance of tightening, and he talked about explicit inflation targeting. Explicit inflation targeting is the monetary policy framework. But when you get there, you have to anchor expectations. And there are 2 possible anchors. One is the interest rate. If it is effective, that's the anchor rate. And then the exchange rate is also. So basically, you use those 2 to manage liquidity, 2 also to create, to make sure that people do not get concerned, anxiety. So the speech lowered anxiety. The speech came across very clearly that we are not going to be doing a lot of the crazy things that were happening in the past. The speech also addressed and said that bank system stability is not just about audits, it's about stress tests that show that in case of stress, the banks will need to increase their capital. So that is a signal, right? That's a dog whistle for saying shareholders' funds and need to be increased to make the Nigerian banking system solid and competitive across Africa.
Yeah.
I think those were the key issues. And I think also that the whole idea of interest rates, at the beginning of the speech, he said it was necessary to have high interest rates to mobilize savings and all of that. In the end, the last comment was that we need low interest rates to actually help the bottom of the pyramid and private sector and the small and medium scale enterprises. No, interest rates are used to actually moderate inflation, and it helps. It's not the only tool, but it's one of them. I think that clearly you can't be increasing interest rates on one hand and also offering the subsidized rate. The subsidized rates will come through special channels, those institutions that are made for that purpose. Yeah. But we need to actually mobilize savings. The national savings ratio in Nigeria is approximately, almost, if you take total deposits, about 28%. Comparable in other countries, you have national savings of about 50, 60, 70, and all of that. It's savings equals investment. Investment with a multiplier gives you output growth. Those are the things that work.
Absolutely.
I also noticed that he talked about proper coordination between the fiscal and monetary authorities. So there you would have monetary conditions consistent with monetary policy and also acting as an enabler to ensure that we have optimal growth.
Well, I mean, thanks for that high-level summary. Some very interesting things there that you said. I want to talk a bit more about the recapitalization of the banks, because one of the things that he had mentioned is that the banks had been subject to mild to moderate stress tests.
Yes.
However, you know, he never said whether in an event of a major kind of shock to the system, But he was clear to say that banks would need to increase their capital base.
Yeah.
So what specifics were we missing? Because a lot was said, and you said you were going to talk about what was not said. It would be good to hear a bit more of what the direction of that policy around bank recapitalization might be. And what do you think the banks, the CBN will be doing in relation to the banks?
Well, there is a kind of fundamental rule that if the size of the central bank balance sheet is in excess of 24 or 23% of the GDP, then it means that the central bank of that country does not have the resources to intervene in case of a system-wide crisis.
Right.
Our balance sheet now is far in excess of that level. Therefore, what you have to do is to be preemptive.
Okay.
Right? And therefore, I think, I'm not a fly in the room, but I think that what he's saying is that we now need to ensure that we don't get into a crisis, systemic crisis. And so the stress test, mild, moderate, or high stress test, that means that if there are shocks, the bank, especially exogenous shocks, can the banking system withstand those shocks?
That.
Especially, and I think he alluded to the fact that some of the banks have foreign currency obligations, right? And if they are to meet those obligations and the exchange rate moves in a particular direction, they could be exposed.
Absolutely.
And therefore, it is important to raise the capital, and raising the capital requirement also leads the industry into further consolidation.
Yeah.
Right? But it depends on a time frame to do that. But when the rules of capitalization of 25 billion naira were put in place by Soludo in 2004, I think, the exchange rate was about 118 naira to a dollar. Ever since then, times 10. So what was 25 billion then is actually 2.5 billion naira today.
Yeah, it may not be adequate. We're talking about multiples potentially.
But meanwhile, their assets and their obligations have actually increased.
Absolutely.
So it is not a rocket science to know that that is necessary. And many of the Nigerian banks have actually gone into sub-Saharan Africa. They have cross-border exposure, which means that you need to raise your capital base at home, because bank failures in Nigeria have actually been linked more to cross-border exposure. It happened during NEFOND, it happened during the subprime mortgage prices and all that.
We've been seeing some of the issues lately with some of the sovereigns, the investments, banks, exposures that have in West Africa, like Ghana and other countries.
Absolutely. So I think that is the case. But the banking system stability is just as important as the sovereign country stability.
Absolutely.
That is Nigeria's
stability
as a country.
Yeah, I want us to touch on other issues. He talked about a liquidity management committee.
Yes.
That's an interesting one, because I interpreted that as in relation to FX liquidity in the system. What do you make of that? Is that an orthodox type of tool that's used by central banks around the world? How would that work exactly? And then the other comment is this dynamic around tracking human development indices, which is a bit of a new narrative coming out of the CBN. What do you make of those?
Well, first of all, I think his definition of liquidity management is not about foreign exchange liquidity.
Okay, I was going to say, this is just general banking sector in the economy.
When banks fail, they fail because of a governance breakdown, erosion of confidence, but most importantly, right, is the fact that when there's a liquidity challenge, the doors of a bank closes when people cannot get their money out. So are you going to wait for that to happen? But it's looking at system-wide liquidity because money supply growth is far in excess of the target range, right? And coming back to one of the things, he said explicit inflation targeting without announcing a target.
Yes.
So you must pass.
It was a bit short on details, but
I guess it's work in progress. There's no question about it. The purpose of the broadcast was to soothe nerves, calm anxiety, and tell people that we are in charge of things. So I think that to that extent, goal achieved. Secondly, I don't want to overpromise and underdeliver, which is good, because that's the personality of the man. And thirdly, we are coming from a position of trust deficit. Therefore, I can't be seen to be making wild, speculations and all of that. Yeah. So I think that this is a safe pair of hands. I had said that before. That it's a safe pair of hands. He knows what he must not do. I think that's more important than just saying what you're going to do. That's my reading.
Yeah, and some of the things that I felt investors would like, they're going to continue settling all the FX forward obligations until all are settled, which is great. But I see you smiling. Did you have any specific comments on that?
One thing that I wanted the central bank governor to come out clearly, what is the true level of Nigeria's external reserves, net reserves? I think he didn't.
I don't think there was any mention of reserves in that speech.
That was convenient, right? So we need to know what the reserves are, because that is where, and if the reserves are truly $33 billion and your backlog is $7 or $8 billion, just write a check.
So you're suggesting you're dipping into your reserves to settle your
No,
backlogs.
It depends on what are unencumbered reserves.
Okay, I know you talked about this issue before.
Yeah, we need to define that. That's the big thing. But if Central Bank Governor was to make a statement different from that which is published, it may even raise concern. So if the purpose of the speech is to calm nerves, then you don't want to stir up things.
Of course.
But whether we like it, what we say or what we don't say, what's important, those are the concerns that investors and analysts have, that what is the true position of things, right? The question of data integrity, and I think it came across very clearly that it was not going to play games and smoke and mirrors. But the other thing which is very important to note is that I monitored Alan Greenspan for many years, past 30 years or so. It is not, the central bank is not an extension of the executive arm of government. Central bank is an independent, autonomous body that keeps all of us in check in terms of our financial system stability. And therefore, never heard Alan Greenspan make a reference to Reagan or or Carter or anybody. This body is independent and autonomous, and therefore it has nothing to do with the policies of the politics.
Yes.
It is the policies, the financial system stability. That is why their term exceeds that of the electoral cycle.
And to be fair, he did make reference to that. Even on the restrictions of the trade items, they mentioned that trade policy is under the purview of the fiscal authority.
Sure.
So there were various signals throughout the entire report where he clearly mentioned that. I really wanted to touch on this. He talked about the low income segment of the population. I thought that was really interesting to come out of a speech by the CBN governor, because the way perhaps the previous dispensation had tried to do that was to be interventionist, almost play the role of a development bank. But here he was saying that they would play a catalytic role that would help to support the bottom of the pyramid, and even things like daily monitoring of wage levels for low-income communities. That was a very interesting slant to the entire speech. What did you make of that?
To be honest with you, I was a bit disturbed about that comment.
Tell us
because the last time I checked, there's a Ministry of Labor and there's a Ministry of Humanitarian Affairs and all that. I think that's the specific responsibility of those institutions. The central bank is focused on price stability. The best way
But I guess there's wage-triggered inflation, so was he trying to link it to price stability?
No. Once you moderate inflation, which is what he's focusing on, by implication, you have actually improved the welfare of the people.
Yeah.
The biggest thief of value is inflation.
Purchasing power, yeah.
Right. So if you focus on fixing inflation, you don't need to start looking at what wages are, because that's the job of some other people. So I found that a bit worrying, and I'm sure the governor will focus on, his plate is full, so there's enough to do in terms of managing liquidity, managing the banking system, managing the foreign exchange rate, and managing. But at the end of the day, what's going to happen to the price of rice is now 61,000 naira a bag. This is December coming. The diesel is 1,200 per liter, and more than anything else, the price of flour is at 47,000 naira a bag, which means a loaf of bread is 1,500. Look at the price of tomatoes. If you break it down, there's no other way than to look at the price of this retail price and see how you can bring those prices down. Or when there's a moderation of inflation, it doesn't reduce prices. It actually reduces the rate of increase. And what I did know, and I saw from that speech also, was that the rate of rot of the economy has reduced. In other words, since the exchange rate has stabilized in the power market around 1,200 max, you find that the level of price increases, right? The difference between 26 was only about 1% in the month of October. Therefore, in December, we are going to see maybe 0.5%. If inflation is moderating and the price levels begin to decline sometime, then you have actually essentially helped the people. People don't want, nobody's interested in whether you're tracking our wages or daily wages. What we are interested in is, how can I now buy a loaf of bread?
Absolutely. And it was that it was a bit odd because it was a very specific point he made in that entire speech, which I thought, I wonder if others picked up on this. But speaking of inflation and wages, how are we going to land at the end of the year with inflation on your closing note? Because we need to wrap this up very quickly.
First and foremost, I think that you've added 35,000 to the 30,000, so 65,000, right? 65,000, when we had the minimum wage in 2019, it was about $75, $80, right? To do $80, you now need 80,000, 90,000 naira, right? So if that was to happen, and companies are not making money, so one, if you increase wages, you actually will increase unemployment because people have to lay off people.
Yes.
And therefore, you need an increase in output. The increase in output is going to come from fiscal intervention, right? And removing the bottlenecks. So if output increases, and the GDP numbers came out yesterday, marginal increase, something. But once we get to a point where the output begins to increase and money supply begins to get constrained, you'll find that inflation actually moderate, and then everybody will be happier. But my closing remark is that do not expect anything magical immediately. The earliest you are going to get the feel.
First quarter of 2024.
The end of the first quarter, maybe second quarter.
Maybe second quarter. Thanks to ending on a fairly optimistic note, Mr. Bismarck Rewane, CEO of Financial Derivatives Company, helping us dissect the CBN Governor's landmark speech, if you like. Well, that's all we have time for today on Business Week. You can catch this again on the Arise YouTube channel. We can continue the conversation on X. Have a lovely weekend ahead. I'm Rolake Akigwe Filani.